my company started growing and I had more and more meetings, this is what happened. I would open a trade, I would go into my meeting, by the time I come out, I lose money already.
All traders who trade, they should have a very defined stop loss. So I gathered a couple of my friends and say, let's put in some money. They say, okay, they trusted me. I look at the chart, I will say, okay, there's an opportunity in the chart. I bought the sterling, a few contracts, and then the news was released. Boom, the whole sterling chart went down against me. By the end of the night, by 10 o'clock, I lost all their money.
Today, this person here in our studio, David, where his life is really just trading full time. He really came from the investment banking background where he had over 25 years of experience in the listed derivative industry and has helmed leadership position in futures broking division in one of the major investment bank in Malaysia. David was also the past president of Malaysia Futures Brokers Association from 2018 to 2019. Let's welcome David.
Thank you, David. Peter. Thank you for that fantastic introduction.
Can you share with us a little bit about your background of what led you to become a full-time futures trader?
So I think it's circumstances, right? And also the time of my life where my career started. I basically started all those 25 years. I started when the first exchange that traded the stock index in Malaysia, which was the KL Options and Financial Futures Exchange at that time called CLOF. Of course, today all merged, become Bursa Malaysia derivatives. So that time I had some exposure in trading, especially in 1993, the equity bull market of Malaysia. Everybody got some experience from there, right? Mostly bad. They ever stayed until 1994, they will be hard hit. But I found that, wow, markets can actually give you those kinds of opportunities. So in my heart, I said, hey, if I had the opportunity, I'd certainly want to be in this kind of industry, right? So 1995 came, the exchange opened, and then all my friends who were together with me at that time, talking about markets, and hey, let's go and get a license and let's become a broker. So that's how it all started, with the KLCI Index Futures. And then, of course, we progress. A lot more, products have come to the market. Our Malaysian palm oil contract has been one of the most active. So I got into that and got into business and 25 years into it, okay? But although I was a broker, inside my heart, deep inside, I love trading and that's how I got started, right? So in my previous work in RHB, I had the opportunity to trade. Of course, work is work, right? Daytime work. And at night, during evening, I would trade crude oil, I would trade the Dow Jones, or I would trade the gold market. Which is the US markets. And chance in 2020, I decided, hey, enough of corporate work, it's time to live the dream. Okay, so I retired in 2020. Just before COVID hit, and I went full-time trading then. Wow. So one thing led to the other. Of course, now I'm kind of full-time managing the business, the proprietary trading company, which we just started slightly a year. We went live January last year, Top Infinity. So that's another extension of trading as well, right? So full-time trading, I'm on my own. Right now, I have to coach and mentor some 15 to 20 traders that we hire full-time to trade. And so we look out for talented traders and we fund them, coach them and mentor them to be good traders.
Right. So just now you mentioned one thing, right? You said the word prop trader. I believe many of these guys who are watching this show right now, some of them probably don't know what is a prop trader. Could you just explain to us what exactly it is and how it works?
Basically, the word prop comes from proprietary. These are proprietary fund, that means it's shareholders fund, so we trade our own money. As contrast to maybe some other professionals who trade on behalf of clients. We don't have clients, we trade our own money. So the main purpose of the whole firm is taking money out of the market.
Right, I see. So basically when we are talking about proprietary trader, we are talking about traders who are trading shareholders' money, right? So it could be in the form of the company owners funding it, or either taking it from institution or whatnot, right? So it could be in the form of hedging purposes or whatever reasons.
Correct.
As long as you are a professional trader, really doing it for a living, that is a prop trader. Now, there's one phenomena that we always see in the market, and lately coming into almost bull run in the market, we are starting to see a lot more advertisement of a lot of gurus coming out and teach on investments, trading, how to read the chart, blah, blah, blah. And I remember last last 2 years when the market went up as well, there were a lot of fake gurus that came out in the market. Some people were really unhappy about it because their ads keep popping up, right? For someone like you who really does it for a living, and today when you coach people, it's not coaching to just teach, but rather to train them so that they can invest your money for you, right?
Exactly.
So you guys are really, really people in the industry. What are your thoughts about all these fake guru coming up, and what sets the difference between a real trader and one that is just, we call it an armchair trader, right?
Well, I wouldn't accuse every guru out there as fake, okay? Some of them are really genuine as well, and some of them are really actually willing to share their
Definitely.
ideas. Yeah. In terms of finding someone you want to learn from, of course, go to someone who's actually actively trading, okay? That's very important. So for us, when we are doing our coaching and mentoring of it, as you say, it's for them to go out there and make money. If we don't coach them properly, if we don't mentor them properly, then it will reflect in the P&L that's coming up from the traders. But yeah, education is a very important thing. Why there's a huge explosion of this shows that there's a lot of investors and traders really hungry for knowledge. And that's a very good thing. Right? If you're hungry for knowledge, you're willing to search out, to find the knowledge and to hone your skills, I think that's a very important start for all traders. A lot of traders actually start out without any kind of education, right? And they get hurt, okay? That's the downside of it. But a lot of times as well, it's the moment you get hurt, that's when you say, and then you persist, I still want to do trading. And then you seek out your educators, or you seek out to learn either by reading books, attending courses, or nowadays a lot of YouTube as well.
Is there any quick tips, like maybe 2 or 3 tips to identify if a person is really an active trader versus someone who's just talking about it but doesn't really have a real knowledge?
First, check their background, of course. Where do they come from? Right? Were they in a position where they were actively traders? Some of them may be retired traders and now willing to share their knowledge, right? So it's very important to get to know who these guys are. Right, so if you have a proper background, you have some sort of proprietary trading or active trader in his past careers, then that will add a lot more credibility than those who don't have that kind of background.
Right. Another thing, David, there are many people who actually I meet, they always say that they want to be a full-time trader one day. They're inspired to be traders, especially younger people.
Yes.
Do you think that there's a discrepancy between what they imagine being a trader is like and really what being a trader is like? Yeah, because in our image of trader very often is depicted by a lot of what people portray on social media, right?
Yeah.
Driving a Lamborghini and then having money raining down the sky, holding that Supreme gun shooting cash on the yacht, and just click a few buttons, settle, a lot of money come in. But what really is the life of a professional trader?
There's so much hype about trading, right? Putting a laptop, sitting under a coconut tree on a beach, drinking a pina colada. So a lot of hype, But when I interview traders, I always ask them, why do you want to choose such a difficult life?
Huh, very difficult, man. I thought very easy. Just click a few buttons.
No, there's a lot of stress, right? That you have to undertake, right? Trading looks easy. It's simple, but it's not easy. Right? One of the hardest jobs to pick. Number one, not all traders can survive our business, right? And the statistics are not very encouraging. Actually, probably 90 or 90% of traders lose money, okay, and become ex-traders. But one thing about this industry is it feels so easy to get into it, right? You go online, you open an account, you deposit your money, and then suddenly you are a trader.
Yeah.
Right? So whether you think rightly or wrongly that's your start of a trading career, it might be, right? But you may just be dabbling in it, right? But if you're really serious, you got to put a lot of work into it, right? Because trading is a skill. And in any skill, you have to master. It takes years to actually be very, very good at it. Yeah. The other thing is capital. Right, so whether you have enough capital to start trading, right? A lot of young people, they may not have a lot of capital, right? So they start and then they trade a lot of highly leveraged products, right? And they find themselves not being able to control the risk and then losing a lot of money.
That's right.
Okay, yeah. So that's one of the things. But the illusion of trading, that's the simplicity of getting in and be able to buy and sell the next moment after your account is open and funded. That's the thing. Everyone wants to sell that dream, right? Because it's so easy to get in. Right. Yeah.
So the truth is, as a trader, what is a day like for you? Yeah, how does it look like from the moment you wake up to closing your eye and going to bed?
Okay, when I let's talk about full-time trading. Right? So after I retired, right? Of course, every morning you have to wake up and look at what the news, what has happened overnight, perhaps in the U.S. markets, right? Depending on what you trade. When I retired, I traded full-time the Malaysian crude palm oil contract. Right, so you have to look at yesterday what happened to the soybean oil markets, because those are related markets. You look at what the crude oil do to get a sentiment or get a feel of what the market would look like for the day. But then even after looking at that, that gives you the overall landscape of how the mood of the market or the sentiment of the market will be. But you still have your own trading method, right? So I have my own trading method. I trade breakout methods, right? So I then what do you call that? Boot up, of course, your computers, and then look at the charts. How is it forming, and has it got a setup? Because you have a method. So if the method says, okay, here's a setup, then I wait for a trigger. So when the trigger comes, then we'll fire the trade, and then we'll manage the P&L of the trade.
So the first half of your day, generally, is you wake up, you're spending some time reading the news and all. How long do you spend?
That's probably
reading?
like half an hour to an hour before the trade,
hour.
before the market opens, right? You get ready, right? You prepare yourself mentally, okay? Have a strong cup of coffee or many cups of coffee. That's what I do. I probably have 3 cups of coffee before I trade.
Wow.
Yeah.
and then after you put up your many screens and...
I have one big screen,
Right.
Yeah.
And how many charts will you be looking at, or how long will you spend time looking at the charts?
Because the charts that I look at already kind of like I've mastered it. It's internalized already. So I just basically look at whether those charts have any setups, right? So if the setup
indicators that
if the indicators are there, or the patterns are there, ready for a trigger, then I'll be alerted. Probably I'll put some alerts, some audible alerts as well, so that when it hits those levels, it will start ringing,
Then what do you do after you turn on all this? Do you just sit there and chill, or you will just really sit down, stare at the screen?
Okay.
How's it like?
So it depends on how you trade. Okay, I did day trading, right? So when I first started, after I retired, I thought, wow, okay, I have a lot of time. So I'm gonna be very active. So I traded very short-term charts, okay, 5 minutes or 10 minutes, right? And then it was very intensive because the very short-term charts will have a lot of triggers, a lot of setups, and then you are banging away on the keyboard every time the signal comes. You key in, you buy or sell, and then you manage, okay, and then the next signal comes, you get out. So that I thought, hey, I didn't sign up for this life. I'm busier than I thought. No, I want to retire. Now I'm even busier, right? Then I changed my style. I found another method that was a bit more, not to say laid back, but less active. So I went to a longer term chart. Not much longer, it's still intraday, right? But it doesn't fire so many trades in a day. So a trader also needs to find his style. Right? Whether that style suits you, right? And if the style doesn't suit you, after 3 months, then you get really, jaded, or you got really burned out because you spend so much screen time. And it's very tiring if you actually, every single moment you are trying to look for a trade.
Right.
So you have to fit your style or fit the market or how you trade to your personality as well. That's very, very important.
Wow. So basically means that right after you read the news, turn on the computers, basically a big chunk of your day is actually locked in front of the screen, or at least be alert of what's happening to the charts.
Yes.
Right? Yeah. Wow. And right after that, does it at the end of the trade day, you just off the computer, okay, I'm not going to care about anything, or your mind still keeps running, you still need to pay attention to things? How does it work?
For me, I once the day finishes and palm oil, the day session finishes at 6. After that, or if I get out of my position earlier, then it's a switch off time and relax and chill. I don't even think of the market again.
Right. The idea of people depicting it as sitting down in under the coconut tree, sipping their pina colada, looking at the waves, and then just chill is not really true lah. It's you actually got to be quite alert. Depending on the kind of trades that you make, definitely, like you say, maybe some allow you to be a little bit more relaxed, less signal, but it doesn't mean that you are totally shut off enjoying, right? Because there'll be your mind is still waiting for something to happen.
Correct, especially if you're a day trader, because you basically trade within the day. So you take whatever opportunities the market gives you for the day, and then you take your profit, or if the trade didn't go for you, you cut your losses, and that's the end of it.
Yeah.
But it is possible to have the pina colada lifestyle if you trade maybe a more leisurely day.
Weekly chart.
Oh yeah, weekly charts. Yeah, so it never fires. So you're on the beach drinking and waiting for that to happen.
Yeah, but then you finish your pina colada, you realize no more money.
Yeah,
You didn't make money this week.
Exactly.
This reminds me of it was hard for me to trade. I tried trading back then during the COVID time, right? So I was running this business, I was trading. But what I realized was there are two things that are challenged. Number one, the boredom. Because there's nothing much to do, you try to convince yourself that every single thing is a possible signal, right? Yeah, I think you'll see that a lot in beginner traders.
Yes.
By the time you learn to accept that not everything is a signal, there's another problem that I face, which is as a businessman who actually has meetings, as my company started growing and I had more and more meetings, this is what happened. I would open a trade, I would go into my meeting, by the time I come out, I lose money already. And the signal actually went off in between the meetings, right?
Yes.
And after a few rounds, I came to learn that I don't think trading is for me. Yeah, but I do realize that if your work doesn't require you to have a lot of meeting back to back, or you are the kind of person who can set aside, like say 4 hours or 3 hours in the night to actually do your stuff.
Yep.
I've seen people do it quite well.
Yes.
Right? Like
yes.
they were like, after work, go back, spend 3 hours in front of the computer, got signal open, they trade, no signal, it's just 3 hours.
Yep.
That's what they did. And
Yes.
I have some friends who end up leaving their full-time job and really do trading for like full-time.
I think you strike some very important points there, right? Number one, of course, patience is a virtue in trading, right? And I see a lot of my traders when they first start doing prop trading, right? So now I'm a full-time trader, right? I have this screen in front of me and I'm going to bang away at the screen. And I say, hey, at the end of the day, they give me this long list of trades. And then I say, what are you doing? Right? So you have to take the best opportunities. Not everything that moves you chase, right? So as they progress and they become better, then they pick their fights. Okay, they pick trades that are good, of high probability, and they don't simply take something that looks like a good trade, or maybe make a punt. Or maybe this will work. Let me try this, and then if not, then I'll cut loss. But you will have a string of losses, right? So I think patience, yes, number one. The other thing about trading on a slower pace or on the side, right? That's what I actually used to do, right? So for those who are actually on a full-time job, there's opportunity to trade as well. Not necessarily you have to be a keyboard warrior, right? So when I was in the bank doing full-time work, I put away my time after dinner to trade, right? So I traded markets that were active during that time. So for those who actually want to do that, okay, whilst it's good to have a full-time job while you learn to trade, okay, that gives you a lot of comfort, a lot of buffer, right? You have income coming in every single month, right? Bringing food to the table. And while you hone your skills, and I do encourage a lot of beginning traders or traders who want to start to do that on a part-time basis. Don't go full-time. Full-time, it takes a lot of commitment. And it takes a lot of skill to be successful. And because there is this learning curve that everybody needs to go through this learning curve. Nobody can escape that, right? It's a skill. So learn to do it on a part-time basis. Like find maybe hourly charts or perhaps even daily charts where you can, it's not so intense. Right, you can do it after your work, or you can during lunch just have a glance at your charts to see if there's anything come up. Then you put in your trades. Yeah, that's probably the best way to start as a trader.
Yep, I noticed that for you trade in futures.
Yeah.
Yeah. Why futures? Because for any beginner, when they first think about trading, they most likely will think about the stock market itself, right?
Yes.
So, what got you into futures? Why not stocks?
My first few bad experiences in trading was actually the stock market, okay? But that's not reflective of the stock market.
Yeah.
That's reflective of my own lack of skills. But why I love the futures markets is because of leverage. So because in trading stocks, okay, nowadays if you buy a stock, you pay full, right? You basically pay the full sum for the value of the stocks that you buy. But in terms of trading leverage products like futures, you don't have to put the full sum of money. Let's say, for example, palm oil now. Palm oil trades about 4,000 ringgit metric ton. Right, the contract is worth 25 metric tons, so it's worth about 100,000. So the exchange says, hey, you don't have to give me 100,000 to buy one contract of palm oil. Just give me 7,000 ringgit.
I see.
Yeah, so that's the leverage you get, right? So 100,000 divided by 7, whatever the figure is, it's more than 10 times leverage. Right, and leverage, of course, is a good thing and can be a bad thing if you don't know how to control it.
Yep.
You can get hurt as well because leverage greatly amplifies your returns as well with losses if you're on the wrong side, right? So a 1% move, say for example, of the underlying, right? You could even trade a stock index like the KLCI. A 1% move on the KLCI, if you have 10 times leverage, means you'll be 10% move in your funds. Yeah. So that's why a lot of people are attracted to trade leverage products like futures, CFDs. Those are leverage products. Options, those are leverage products. Yeah. So you get the biggest bang for the buck of your money.
Right. And it's unlike stock where the margin requires you to pay like a percentage of interest, and there's a timeline you have to pay back and all, right?
Yeah,
but futures, the timeline is longer, right? It's not like I need to close the deal within 2 days, that kind of stuff, right? How does it work?
One special thing about stocks and futures, the difference is this. Actually, stocks you can hold longer. Futures has got its expiry months. Right, so let's say, for example, palm oil will have its monthly expiry. Right, every single month it expires at a particular date. That's a special features of futures, right? But futures traders tend to be rather short term, right? Unless you're a very long term position trader, you normally don't hold your trades more than a couple of days. Right, most do it within the day, being a day trader, because the volatility and the opportunity allows you to take your profits. Right, you don't have to wait that long.
Right.
So that the difference is there are expiry months in all futures contracts. There are expiry months. So if you trade currently, what I'm trading now, palm oil, I'm trading the July month. Right, so when the July expiry, of course we don't hold until expiry because futures again is a very special vehicle for. Palm oil is a physically delivered product. That means if you hold until expiry, you'll be delivered actual palm oil, right? The physical
sending it to your house, right?
Yes, yeah. So those are very specific to commodities because commodities started that way. People actually go in the market and take physical delivery as well. But a lot of contracts in the world, like the stock indices, because you can't give them a basket of shares. So those are what we call cash settled. So there's physical delivery and there's cash settled products.
Right. So there's this particular thing that I hear people say that they like futures, aside from the fact that there's the internal leverage itself based on contract, compared to if you take a stock market and then you take a margin account and then you need X amount of money inside, you get charged an interest, blah, blah, blah. But this one is naturally the contract is built in such a way, right?
Yes.
So it's kind of like 0% interest period kind of idea. But more importantly, some people actually told me this one thing is that commodity itself is actually used for manufacturing purposes. So what happens is that there's already a base liquidity that's happening, regardless of the fact whether you trade or don't trade also, they have to buy it because they have to use it. And because of that, it generates a certain amount of liquidity that makes it much more, to a certain extent, predictable. Unlike the stock market where the accumulation of it, whether are you a long-term investor or short-term investor, it is still based on the idea that I want to hold it for appreciation purposes or other speculative purposes. But in this case, in commodity, it is more of, yes, there's X amount of people, let's say soybean, they need to make soybean products, right? So regardless of whether the market is up or down, I still need to buy it. So because of that, it makes it easier for you all to set the parameters and to look at the market. Does that really work that way?
Those are what we call the inherent supply and demand dynamics, right? So you have the supply, okay, and then you have those that use the product, the demand side, right? Now, besides the demand and supply, there are a lot of external factors, and especially for commodities are super sensitive to weather. Right, so of course, Malaysian palm oil, sensitive to all those phenomena like La Nina, El Nino, all those weather phenomenon. Some crops overseas, let's say you plant a certain crop, and if a hurricane comes and wipes out your stock, it's very sensitive. So it's the external factors beyond the supply and demand that actually makes the commodity a lot more volatile. Right? Take for example, crude oil. Right, crude oil, of course, you can kind of measure the demand, kind of measure the supply, OPEC supply to the market. But what is open to like geopolitical developments, right? What happens if the war, breaks out or is happening in Middle East, or what happens to the Ukraine-Russian conflict? All those are very, very likely to impact all the underlying prices of the commodities, right? So the S&D plays a very important part, of course, in terms of supply and demand, but all the external factors can come in and make the prices very, very, very
right. So there seems
volatile.
to be much more variables that makes it more trading opportunities that can happen, right?
Yes, most certainly.
Now, since the world now is in a very interesting position, we had a lot of geopolitical tension, we have a supply chain issue, we have weather issue, all these kind of things, right? Maybe you can share with us, what are some opportunities that you see in this market today, irrelevant to the different future products?
So let's talk about the specter of war, okay? The much, nowadays people don't miss their words, they talk about World War III, right? Yeah. So this geopolitical situation, right, creates a lot of movement for things like oil, right? So crude oil, right, which is one of my favorite products as well. I trade the CME WTI crude oil, okay, and there's gold as well, right? Gold, everybody's been very bullish about gold. Everybody talks about gold these days, right? So you could, of course, gold, there are many ways to trade and buy gold. You could buy physical gold and hold gold. One of the most efficient ways of doing that is actually get into a futures contract where you actually participate in the price movements of the underlying gold. Right.
And so what will be this gold product on?
Okay, so where do you want to trade gold? Various venues. Yeah, you could do CME gold contract, the GC, which is a worldwide benchmark for gold prices in US dollars. Now there are smaller contracts as well. You could trade micro gold, because the large gold contract is very expensive. It's 100 ounces, right? And the gold now is about over 2,000 US dollars per ounce, so that's like a $200,000 contract, right? But there are smaller contracts, 10 ounce gold. There is micro gold, which is more affordable for the man on the street to start trading as well. Right. So gold, WTI, and if you think that with all this political chaos, equity markets are going to underperform, then you could even trade the index on the other side. Right. Okay, that's the beauty of futures. You can not only have a view that the markets are going up, you can also profit from markets coming down. Right, so you can trade both ways. So you're not limited by a one-sided or one-directional market.
Right. Yeah. Now you touched on political stuff, right? Let's talk about climate change, right? And in terms of today, we're talking a lot about climate change. What are some of the future products that you see an opportunity for trade?
Climate change. I haven't traded a climate change. Let's see what products. Okay, those things that
changing weather and all that kind of.
Yeah. So changing in terms of weather. Okay, now even in Malaysia we feel the heat, right? The last couple of weeks.
So
yes. Those are going to impact crops like soybean, right? Crops like corn. Right, those are the whatever products you plant where the weather, if it changes drastically, will impact the supply of that particular crop. Okay, has a big impact. So if hurricanes were to wipe out a crop, okay, as we said just now, then there's a lack of supply in the market, and obviously that would be a very bullish and very powerful surge on the upside because of perhaps a lack of supply coming into the market, right? Even in terms of crude oil, right? The supply disruptions and all that can have a very big impact on oil prices as well. Right.
And the good thing about it is that it seems like when it comes to the futures, you just need to look at a lot of things and then you find opportunities everywhere. It's a little bit unlike stock where it is more of a very single out industry play, right? Like if let's say I'm interested in, say, semiconductor, if the weather is sunny, there's not much of things that I can look at. I mean, the weather is sunny. I know eventually maybe the lack of water that may cause a TSMC to run dry on bill, but that doesn't make sense because by policy they are kept with a steady amount supply of water, blah blah blah, this kind of stuff. But instead, when it comes to the future side, there seems to be much more opportunity. Weather hot, soybean. Weather cold, also soybean. Goes two direction, right?
Yeah.
You say go up or go down like that. Is that one of the main reasons that it excites you? Because as a day trader, what you're looking for is daily opportunities.
Yes.
So as compared to if you're talking about day trading in stocks, there's probably less signals going around. So it requires you to have much more larger capital to one shot, bam. When I see an opportunity, maybe 1 month once, I need to take back as much. But on the trading, on a futures basis, because every day there will be some sort of a signal, or every other few days there will be some sort of signals.
Yes.
There's much more opportunity to make money in a smaller magnitude.
Yes, indeed, because of the volatility, right? So all these factors, the external factors impacting all those underlying commodities, or even indices, for that matter. Stock market indices is one of the most popular products to trade among the futures traders, right? The big sector of global futures markets are all stock indices. It's a very, very... so you could trade Malaysian KLCI, you could trade the Dow Jones, the S&P, the Nasdaq index, and those are extremely popular. Even more popular than commodities in that sense that a lot of traders, they have some sort of feel for the equity markets. They could have been an equity trader, stock trader, right? So it gives them a sense of where the market is. So it's an easy product to move into, right? So I instead of trading the individual stocks, then I'll trade the index as a whole, right? And that's a good advantage as well. You don't have to do any stock picking, right? So you basically trading the whole sentiment of the stock market. And futures, if you feel that the market's going to come down, you can still profit from it. Whereas if you own stocks, it's a one way kind of market.
Yeah, that's right. It requires a lot more patience and a lot more capital to a certain extent when you want to start, right? Okay. If not, the money that you make is not very significant. Yeah, I recall when in the early days when I started trading in stocks, I talk about 2,000-3,000 ringgit. I mean, you made 30 ringgit, 50 ringgit. There's no feel, Yeah, but as the number grow bigger, then you're talking about a bigger amount. And I do see that attractiveness of where future comes in as a daily trading tool, because you're talking about using 7,000 ringgit or 5,000 ringgit, but you're effectively every trade close, you're probably looking at 5%, 10% or 20% kind of numbers, despite the fact the volatility that move is probably only 3%, 2%.
Yes.
You're not looking at like 50% jump to get that kind of numbers, right? Yeah. All right. So thank you very much, David, for sharing with us your experience as a trader. We definitely have a lot more to go, but let's take a quick break right now. And later when we come back, we're going to get David to share with us what are some of the easy ways to maybe read a chart and to actually buy or sell a futures on a platform itself. If you are interested in trading futures, you can open an RHB Futures account. For new users, RHB is offering free brokerage of up to 500 ringgit for your buy contract for 60 calendar days. This offer will last until the 31st of August 2024, so don't miss it. And guess what? You may also stand a chance to win a Perodua Activa SUV or amazing vouchers worth more than 200,000 ringgit. Check out the link to find out more details and terms and conditions of the campaign. If today I'm interested in starting my career in trading futures, what should I do? How do I go about it? Do I just trade at the moment I have a normal stockbroking account, or how does it work?
Opening a futures trading account, it's very similar like opening an equity trading account, right? Of course, go to a licensed futures brokers, okay? All futures brokers in Malaysia, they're all properly licensed by the Securities Commission. Personally, I use RHB Investment Bank as my futures broker, obviously because I used to work there as well, right? But they're very, very good brokers. So you open an account with them, okay? In fact, most of the time when you open an account with a investment banker or broker, you can both open an equity account and a trading futures trading account as well, right? So after opening an account, once it's approved, the account is open, then you basically fund it. The funding is what we call margin. Margins are the amount of money that exchanges require to put as good faith money. You don't actually use the money to buy anything, right? But it's put there as a deposit. In case you have losses, your losses will be deducted from your margin.
Right.
So futures is actually traded on margin. That's why it's you trade only a small amount of deposit compared to the actual value of the contract that you're trading. Yeah.
That's right. For those of you who need a little bit of explanation of how it actually works, right? I'll just put it a little bit in the layman term. Think of it this way, right? Tomorrow you want to buy and sell a house, but instead of buying the house, all you need to do is just put a down payment for the house as a deposit, and then you go to the other person and you say, hey, I got this house, you want to buy or not? Yeah, I'm going to sell it to you at 1.5 million. Yeah, but actually the deposit that you put for the house only maybe 100,000 ringgit, right? And now when you sell at 1.5, right? So that's the whole idea. You don't have to buy the thing outright. All you need to do is just trade with a deposit. Yeah, so that's the whole concept behind it.
Yes, that's a
right?
very close description of how it works.
Now we know that you can just open a futures trading account. It's different from stock trading account, but you can open both at the same time. You can go and approach any reputable investment banks, for example, like RHB, right?
Yes.
Right. Now, after open, I put my money in it. Then the question is, how do I go about, right? Do I just simply see any future, I suka, I go and buy ke? What do I do?
So actually, before you even go to the step of opening an account, right, you would have somehow acquired some skill or some familiarity, with the contracts that you are focusing on or wanting to trade, right? So the opening an account is where you actually go live. So a lot of times I advise traders, you could have your account ready. Okay, you may not necessarily trade it immediately, okay, but the beauty of opening an account is the futures broker will provide you with a trading platform. And a lot of trading platforms these days on futures trading are very advanced, right? So they have all sorts of charts that you can use, all sorts of indicators that you can use. There are even some platforms you can and go and do mock trading.
Right.
Okay, or paper trading, which is a very good way to practice. That's the closest to actually trading. Right, so you can actually practice how to put in orders, what type of orders, how to buy, how to sell, get familiar with the functions of that particular platform. Right, every broker will have different platforms. A lot of brokers have a few different type of platforms depending on what kind of trader you are.
I see.
Right, how sophisticated you are.
So can I say that before you even start trading, you need to already have certain products in your mind, right?
Yes.
Like for example, maybe you're already thinking about trading the E-mini Dow futures, right? Or either the corn futures, like or either there's even like live cattle futures from CME Group, and like there's like CME crude oil future that you mentioned just now, or CME micro copper, and then CME interest rate, 2-year treasury note. You need to already know what you want to trade, is it? Or can I just go in the market and say, I know that all these are future, I just slowly see? Or should I start with like, okay, I think I want to trade these few products? What's the best way to approach?
The right way, of course, you should know what you want to trade before you actually start a live account, right? But most of people don't do that, right? Most of people jump into it, okay, then learn, okay, which is not entirely wrong. But if you recognize that your skill levels are still not there yet, okay, maybe you start small, right? You don't go full all out, okay? You do small contracts. But one of the good things as well, the brokers usually have some kind of a coaching, some kind of a teaching. They have courses, they have webinars, some of them which I participate as well, to help educate the clients on how to trade. Right? So that's part of the services that even RHB Investment provides. Guide you through how to go about trading, okay? Perhaps find certain products that are more suitable for you as a beginner, right? Maybe you should not be trading very large contracts. Maybe you should be trading a slower moving contract where you can basically react better. Then once you're very skilled, then you can trade a faster, more volatile contracts.
I see.
Yeah.
What are some of the slower moving contracts that someone can start with?
Some of the smaller contracts and probably more comfortable contracts would be in the Malaysian context, the index contract that we have, the KLCI, which is not that volatile, right? Yet there are a lot of opportunities. Some seasoned traders may not like the FKLI because they can't day trade on it. Okay, but that is very suitable for those starting to start trading futures as well, right? Of course, in CME you have other contracts as well, but CME being such a huge global marketplace, a lot of the contracts are very volatile anyway. So if you want to start, say for example, trading CME contracts, then you trade the smaller contracts first. Right, you trade the micro contracts, which they have a whole range of micro contracts from indices like Nasdaq, Dow Jones, S&P, or you can trade even the micro crude oil. You can start trading the smaller crude oil contracts instead of the large or micro golds and all that. So you start with the smaller contracts where the movements are still volatile. Okay, but the effect of the movements won't be so much because you are trading a smaller size.
Right, I see.
Start
So
with smaller sizes.
I just go into the search box there and I type CME Mini
or
S&P or micro S&P, then
micro
I'll be able to see it.
Yes, you have a whole suite of them.
Now,
yeah.
let's dive in the most exciting part of trading, which is the chart. Now, I use it personally even for my long-term trades, just to time the market and see what's the best price that I can get out of that short period, right? But for yourself, this is something that you truly make a living with. So when you open this, I saw that there's a lot of arrows. What are all these arrows all about? And what chart is this?
Let's pull this chart out. And this is a chart of the WTI crude oil futures contract traded on NYMEX. NYMEX, one of the exchanges within CME, right? And you're looking at a daily chart, right? Now, the reason why I pull out this chart is I usually trade a chart without much indicators, okay? Because I believe in trading, the more simple it is, the more robust your method will be, right? So very complicated, and that tends to be a beginner's mistake, right? Thinking that putting a lot of stuff onto a chart actually helps you in your analysis. It does enable you to tell a lot of stories, but not necessarily enable you to trade better, right? Because the more things you have on a chart, the more things you have to decide. Okay.
That's right.
So in trading, a lot of times that once you're in the market, you have to react, right? Rather than continue to analyze, right? So I use very simple charts, and I chanced upon this when in the early 90s, okay? So before that, I was also trading a chart full of indicators. I had my whole chart full of lines and full of panels of indicators, but I finally hone it down to be as simple as possible.
Right.
And one of the reasons why I wanted it to be simple as well was during my time in the investment bank, I had to train a lot of brokers as well. Those juniors just came up from school, joined the bank, okay, and the staff are supposed to go and educate the clients, right? So you have to be equipped as well. So I thought, hey, what's the fastest way to take a pure beginner to a certain level where he can actually read the trend for the markets and advise the clients, right? And this is the same method that I'm sharing with you today. What you see on the screen, okay? Basically, what you're seeing here is a candlestick chart, okay? I'm not using candlestick as an analysis tool. Basically, it portrays a chart easier on the eyes. That's why I use candlestick, right? But what I'm going to do is, you can see from the left side of the chart, this is a chart from June of last year, June 2023 to the current month, May of 2024, right? What you can see here is very evident on the left side, the market is moving on an uptrend, right? And then it has a peak around above 94, the prices, and then it comes down to a low below around 68, right? So you see an uptrend and you see a downtrend, and then from there it picks up for another uptrend again.
Yep.
Right. Now there is actually a code to this, right? A DNA to this, and that DNA is called fractals, and fractals is all those arrows that you see right on the chart. Right. So now fractals is basically what is a fractal? Okay, a fractal is basically a pattern that repeats itself, right? And it repeats itself in all different scales. So if I bring the daily chart into, say, an hourly chart, the hourly chart will also display fractals. Okay, so if I bring it down to even a 1 minute chart, the 1 minute chart will also depict fractals. Okay,
right.
So they are like nature, right? In a large scale or small scale, you find repeating patterns.
Right. So fractal, to put in summary, is actually repeating patterns. Like,
yes.
Kind of like it shows that the correlation, when this happens, this will happen. Like that, is it?
Okay, we use fractals to basically see the wave structure of the market, right? So we believe that market moves in waves.
Yes.
Right, so it waves just like we sit on the beach, and if we sit on the beach long enough, right, we will see the tides coming in, and then after that the tides will change. It'll be the tides going out, right? But while it's coming in, it comes in a wave-like fashion, right? It comes in closer and then closer and closer to you. If you sit on a beach, okay, that's the high tide coming in. Okay, so there is a kind of formation as well. It's a very fractal nature as well. And as the tide goes out, if it's now the tide that's going out, a low tide, then you see the tides receding and all that.
Right.
And you see all these patterns on charts as well, right? So if I if I look at the chart again, right over here, and let's start on the left side of it, right? So all the arrows that you see, they are the green arrows, which is what we call the up fractals, and there is the red arrows, which the arrowheads, which we call the down fractals, right? So in an uptrend, which is the first 1/3 of this chart, you will see that the green arrows, right? You see the green arrows continue to be higher and higher, and the red arrows continue to be higher and higher. So that defines an uptrend. Okay, an uptrend is where the highs are getting higher and lows are getting higher as well. Right. So as it goes up and peaks at above 94, right, then you see that the red arrows are getting lower and the green arrows are getting lower as well.
Yep.
And that is the characteristic of what we call a downtrend, right? Which are lower highs and lower lows, right? Of course, there's another mode of the market which is sideways, which you don't see over here, right? So oil markets are extremely trendy in the sense that they didn't go into a sideways market. Of course, in a sideways markets, the arrows will be at the same level on the top and the arrows will be same at the bottom. So there's a very well-defined range in terms of the highs and the lows, right? But in this case, this particular chart has a very nice movement in the sense that when it turns down, after that, it turns up again. Now, the key to recognizing this chart, where it is valuable, is how do you recognize the turning point? Where does a chart turn from a downtrend to an uptrend?
Yes.
Okay, so the key is actually right here, right at the bottom over here. If you see December of 2023, you saw that it was quite easy to recognize an uptrend, a downtrend, and then subsequently the uptrend again. Now, that's because our eyes can recognize patterns, right? But the key here is how do you recognize the market turn, right? Because you know that the market is now on uptrend, okay? And the key is recognizing the turn and probably take some profits or go short on that position, right?
Yep.
So let me give you an example of how a turning in the market looks like, right, in terms of these fractal formations. Now, I've drawn a circuit around the markets during the end of 2023, where the oil market actually made a low near the $68 a barrel price, right, which is where I've circled it. Now, you can see that there is a point over here, which I will draw, okay, from this low. I will draw a point over here. Okay, I just connect the lines to the arrowheads. And you can see right over here, as it made a bottom, okay, then it reacted to a high, then it came down to a low, but this particular low this time did not exceed the low at 68, right? So as a definition of a downtrend, it needs to make continuous lower lows. But then now it doesn't make a low, but instead the market went and take out the high right over here, right? So when that high is taken out, that's where the market turns, right? So for a person who reads the chart, you need to get used to this, reading this formation. That's the turning point. And you will see even right over here on the right side, okay, in April to May, market was on an uptrend since end of last year, and then it made this turn over here, right, move up, and then did not exceed the high, and then came down to break this low over here. And then the market continued to go down. So this is something that if you want to learn about fractals and learn about how the actually market move in a naked chart, you must understand the way the waves move. right? How it recedes from a high tide to a low tide, much like on the charts, how it goes from a uptrend to a downtrend, and vice versa from a downtrend to an uptrend.
Right. So basically what you do is that when you are looking at the chart, you are looking at certain signals which can be in the formation of a fractal.
Yes.
Then once you see it, that means that there's a window of opportunity.
Yes.
So it means that you're going to either buy or sell.
Correct.
Right? So does it also need to be supported with, like, let's say certain news that's in the market that accompany with it to be safer, or as long as I see a pattern, I should just go in?
Using charts and using what we call fundamental analysis or news trading, the news and the fundamentals set a kind of a big picture, okay, to the sentiment of the market, right? So you use charts and you use patterns or even indicators to use it as an entry and exit triggers, right? You use it for timing. Basically, you use the charts for timing, right? So you may have a bullish sentiment, okay, but when do we get in? Okay, you feel that the market is going to turn from, say, now the market looks very good, but it may turn bearish, it's toppish, but when? When do you go and take your profits, or when do you go short, right? So the charts will help you to time your entries. And that's the purpose of using charts, to time it.
Right. So the bigger sentiment still comes down to what is the market pulse on the main outlook at this point, right?
Yes.
So in a sense where we can say that, let's say we know the geopolitical tension. So we should be expecting somewhat of a bigger trend of an uptrend for oil and gas.
Yes.
Right? For crude palm oil, simply because of supply chain, yada yada. So by this time, you should be looking for signals and on when do you enter to buy the futures, right? Yeah. So is that what they say, that don't fight against the tide?
Oh yes, certainly. In trading, you have to go with the flow of the market. Yeah. You have to want what the market wants, right? You don't go and fight against the market, okay? Because a single trader, okay, unless you are very, very famous and big traders, you can't move the market yourself, right? So you trade with the trend, you go with the trend, go to flow, as some people will say. The trend is your friend, right? So that's, I would consider, the better way to trade, rather than trading against the trend.
That's right. That's why sometimes even in trading, it teaches us about the philosophy of life, right?
Yes.
Yeah, going along with the flow.
Yes.
Yeah, understanding the trend and move along with it, right? You may have certain interest in certain things, but it may not be the need of the market at this very point. If you choose to still dabble into it, it may not make you a lot of money. As simple as that. If you want to be very rich, you still got to follow along. Yes, there are contrarian approach that end of the day you can make big money. But think about it, even someone like Michael Burry has been talking about the market is going to go down, but he needs to talk very long before the market go down. You see, the more I look at the market, right, I have this theory that I always share with Frankie. I always say, actually, whether you say the market is going to go up or down, right, over the long run, you're still going to be correct.
Yeah,
you just need to stick with you just need to stick with your guns.
Yes.
You say for 1 year or 2 years, you sure get correct ones. But if you're looking at the day trading scenario, then don't lah. You're going to pay a lot of school fees.
Yes. Yeah, a long-term view perhaps is a luxury of the research people or the researchers, right?
That's
For
right.
traders, we basically move the market. If one goes up, we follow it. If one wants to go down, we follow it down. That's where we make our money.
Yeah, unless you are a very, very, very big trader.
Yeah, if you are a market mover or market shaker, that's
a
very
whole different story altogether, right? Learning about trading is about understanding the chart and then seeing these kind of entries and then making your move. I believe for yourself, you have traded a market for so long, there's definitely a lot of highs and lows. How was it like for you when you first started? Did you see this chart and then you learn about it, and then that time when you first started, okay, these are opportunities, and you start going in? Did you end up following these rules but getting it wrong and lose money?
I think the most precious lessons in trading usually happens when you start. And if you can learn those lessons, then you can then graduate to become a better trader and all that. Okay, most of the times during the beginning part of your trading, you either learn those hard lessons, and one of the hardest lessons I learned was in the early 90s, right? So, I read some books on trading, I dabbled a bit on charts, and I thought, hey, I'm okay already, So I gathered a couple of my friends and say, let's put in some money, right? Mostly their money, okay? And let's start trading the FX market, right? So I got around two of my friends, right? And they say, okay, they trusted me, right? Kind of trusted my skill in reading the charts. And then put in the deposit, started a trading account. I put in a deposit. I remember it was a Friday. I definitely remember this very, very well. It was a Friday, and it was the night of the non-farm payrolls. The non-farm payrolls is a very big data night, okay, NFP. And I look at the chart, and before 8:30 at night, I will say, okay, there's an opportunity in the chart on the sterling, right? So I'm going to buy the sterling, right? So I bought the sterling, right? A few contracts, and then when the what do you call that? The news was released. Boom! The whole sterling chart went down against me, right? And what would be a normal trader do when the chart goes against him? Buy some more.
Oh, buy some more.
Buy
Okay,
some
okay,
more.
okay. Okay.
Got money, So I bought some more, okay? And the charts continued to go down. And by the end of the night, by 10 o'clock, I lost all their money.
Oh.
Yeah. So that was, and I lost two friends actually. Yeah, they refused to talk to me for 20 years. But there was a lesson to learn. It was a very hard lesson. I couldn't sleep for weeks, okay? Because number one, you have to go back and explain to you why this morning you gave me all the money and then at night it was all gone, right? So that was very, very difficult, but there were very important lessons I learned there. And one of the main lessons I learned is I should always have, number one, a stop loss, okay? All traders who trade should have a stop loss, okay? They should have a very defined stop loss in terms of how much money they are willing to lose per trade, okay? And that should be a reasonable amount, okay? Some people trade between 1 to 2% of the account size that will risk per trade, so that in case you have a string of losses, you still survive, right? You still be in the game for the winners that will come. So that's a very important thing, and that sunk deep into me. So from that time onwards, I never traded without putting a stop loss. The lesson was so deep and so painful, okay? And that became one of the most important lessons I learned in trading, is always trade with a stop loss. That's risk management and money management rule number one. Always trade with a defined stop loss. Right, that's very important. Those of you who are going to start trading, okay, if you don't have a stop loss when you're trading, I can guarantee it will come and bite you. Right, you will take the mother of losses. Right, yeah. If you don't have those small stop loss,
Doesn't matter how much you win, right?
Doesn't matter
one
how
will
much.
just kill you.
Just
right?
one trade is enough to wipe out all the profits, including whatever capital you have in your account.
Right.
Okay, it was a painful lesson, right? But through that, I learned one of the most important lessons of trading.
Going through such a hard experience and difficult experience, I can see that when you are sharing me, it still is a very emotional incident for you.
Yes.
For some people, they would have just said, trading is not for me. Let's call it quits, right? What got you to continue, stay on, and right now you're building a career in it?
It's just that I think the passion of the markets and seeing the opportunities, and also recognizing that you broke one of the rules of trading, right? So although it was quite damaging for my friends in terms financially, right? But to me, I learned a few things. One is the stop loss. The other thing is about emotions in trading. Every time you go into a trade, right? When you are not in a trade or don't have any positions, they are pretty sane and rational. But every time you put in a trade, you become a totally different animal, right? Because now P&L money flows out and into your account. You become a different person in that sense because emotion starts to take over. So the other lessons that I learned through all the other years progressing into trading is how to actually manage emotions. And it's something that cannot be taught. Right? Emotions and managing your emotions. And a lot of traders fail because of this last part. They may have a very good solid method, okay, which is a profitable method, right? They may know all the mechanics of risk management, never to risk more than 1-2% of their capital and all that, okay, put stop losses. Yet the last part, the trading psychology, the fear, the greed, and sometimes the ego can take over, and then you make very irrational decisions, right? Even though you know that, hey, you should take a stop loss, but you didn't take it. Your chart showed that you should be buying, but then you sold, and then you held on to it. Although your charts continue to scream buy, you still sell, right? So that's the last frontier, which is actually trading psychology, the most difficult part to master.
Right.
It's not easy to teach because you have to feel it yourself. That lesson, when I lost so much money for my friends, that's a very deep lesson as well. So that stuck to me for a long time, and that was the lesson that I found the most valuable in my life.
I was just reading this particular book, right? It was talking about, I think it was Theta trading or something like that, right? They said this one thing: when they gathered the people together and getting them to trade, they didn't bother how much money they made the day. The only question that the boss asked them is, did you follow? I don't care whether you made a lot of money or lose a lot of money. Yes. Did you follow? Correct. If you didn't follow, you're out. That's Correct. All. Because they say that ultimately it's about managing your emotion and following a system to make money. So that's really, really true in prop trading world.
Absolutely. Yeah, it's the process, not the results. Yeah, if you have a robust enough method and you follow it and you follow the process, do the right thing, then the results will come as a result of you doing the correct process.
Now let's change the gear a bit and talk about something happy, right? Yeah, since we talked about low already, let's talk about highs. Yeah, what's the most money that you ever made? Yeah, in one day trade.
After I retired and went to full-time trading, I think the highlights of it was because at that time during the pandemic, right, a lot of things were very volatile, including palm oil, crude oil, and all that, right? So I was trading palm oil full-time. Without mentioning the actual absolute figures, right? In the year of 2022, we had a fantastic run. Palm oil was so volatile on a daily basis. A normal current range of the palm oil is something like a high low of probably 60 to 70 ringgit high and low. But during the time, we were talking about the 100, 200, 300, 400 ringgit, a high-low kind of range, right? So those ranges were fantastic for trading, and it gave me a very proud trading record as well. For that year, we were close to up 400%.
Oh, wow. 400% in a year.
400%, yeah. Those are the possibilities in terms of trading futures, of course. Yeah, so that was, I think, the highlight in terms. But the market helped, obviously, right? You need good market conditions to have this kind of stellar performance, right? It doesn't come every day, and it doesn't come every year, right? Some years are lower, right? Some years, you may be making maybe only double-digit gains, right? But for those who are trading, have perhaps more different kind of return goals than perhaps investors, right? Investors, if you are equity investor, you said if the equity markets can give me 15 to 20%, oh, it looks fantastic and very happy, right? But a lot of futures traders will not think that's a very fantastic thing, right? Because they're looking at 15% a month, that kind of expectations, right? Is it possible? If you're highly skilled, that's possible, right? It takes a certain amount of skill, certain amount of years in the market to do that, right? But the mathematics will work, Let me give you an example, right? If you have a strategy that, okay, let's say your strategy is not that super, it only makes profitable trades 50% of the time, and then makes losses the other half of the time, right? But you have a strategy that when you control your risks, right? When you lose 1%, and you have a good strategy that when it makes for you 2%, right? Which what traders say, these are the risk-reward ratio, right? Yep. You have a reward of 2 units against a risk of 1 unit, right? So let's say, for example, 1% risk, okay? And you do a day trade, and it's possible to let's say, for example, 10 trades in a month, right? So you lose 5 trades.
Yep.
Right? So that's 5%. 1% per loss, and it's 5%. And then you made 2% for the next 5 trades, you have 10%, right? Minus the loss of 5%, you have a 5% return for the month. So mathematically, it is possible. Right. And the volatility in the futures market allows you to do that. Provided you have the skill, provided your method is robust enough, and provided you follow the process.
Right. So ultimately, it's all about the system, right? What do you think should be a standard expectation if I want to be a full-time trader? What kind of expectation should I be looking at on a monthly basis in terms of return that's considered realistic?
Realistic if you are able to take in something like 2%, 4% on a consistent basis, that's an extremely good return. I should be very proud.
On a monthly?
On a monthly basis, 2 to 4% is and well controlled, not high volatility. You don't know big crazy swings. Some people make crazy swings 100%, 200%, and then lose all of it. Right? Steadily, consistently, if you can make between 2 to 4%, is extremely respectable. You will be considered one of the better traders.
Right, because you're talking about just under normal circumstance, right? Which suddenly there will be a peak that comes in, like suddenly a nuclear or missile is being sent, then that's when your numbers shoot up significantly.
Or down.
Or down, right? Yeah. That's right. Work both ways, right?
Yes.
We would say that on a yearly basis, you are actually looking at 12 to 24% of return of your capital. But the bonus comes in when there's those interesting things that happen, like whether a missile is being sent, whether is it whether suddenly very hot or certain policies being announced or something like that.
Correct.
Let us talk about the career of it, right? The truth is, being a trader can be quite lonely from what I've seen, because it's an individual work.
Yes.
You're in your own world, you sit down, do your own analysis, trade, fully focus. How does your support system work? Because like for us, if we're working in the office, there's this whole support system, right?
Yes.
But for trader, how does it work?
So exactly what you say is correct. Trading is a very lonely endeavor, right? Because you are the one make the decision, you are the one that executes the trade. Now, one of the good things of a prop firm is this. Okay, there are a couple of advantages that traders get from us in a prop firm. Okay, number one, of course, funding, right? So young people will have, number one, the first challenge is you don't have much of a savings, right? So you don't have much funds to actually trade, right?
That's right.
So a prop firm provides the funding, provided you show that you're good. Okay, we provide the funding for you to trade. Number two is you get coaching and mentoring, because you're like myself, I will coach the traders. I will troubleshoot where their issues are, help them in terms of their methods. Also have to counsel them on their trading psychology. Make sure that risks are well controlled. They size their trades properly. And the other thing is they have a community of traders. I have a community of 15 to 20 traders. They can exchange traders. Ideas. They are not lonely in the sense. They go to work and they are together. It's a very lively bunch of people sharing a lot of ideas, right? So the prop firm provides that kind of environment, okay, where it is highly conducive, okay, provided it can take the pressure because you are trading professionally for a trader to develop.
So basically, it is quite lonely if you're doing it at home, but if you're with a prop firm, that's a whole different story altogether.
Yes.
And besides the fact, like what you say, if you're a fresh grad, and even if you put up 10,000 ringgit to trade yourself, right?
Yes.
You're talking about 1% or 2% a month. It's definitely not life changing.
Yeah.
Right. It's definitely not life changing,
Yeah.
right? If you're talking about 100,000, even 100,000 is not that life changing. You're just talking about 2,000 ringgit extra a month, right? So you're literally talking about big numbers there.
Yes.
And that is what helps you to really make a living out of trading.
Yes.
Without taking the unnecessary risk.
Yes.
Because if you were to, I think for younger people, the issue is that I need 1,000. So you go all in. And when you go all in, you can double it up within 2 days or 3 days, but there's also a high chance of you losing everything in 2 days or 3 days.
Exactly.
Right? Yeah. And I think this is where there was this whole article that talked about financial nihilism, where a lot of younger people don't see an opportunity to actually accumulate wealth.
Yeah.
Therefore, if I'm going to lose 500 ringgit, it doesn't kill me, but chance of doubling it is something. But that also makes a lot of people go into financial difficulty.
Yes.
Yeah, and we saw a lot of that during the COVID time, during the whole
Correct.
crypto period,
Correct.
all these people trade and go crazy and become what we call degenerates to a certain extent, right? Let's take a quick break, and as we come back later for the final part of this episode, we're going to talk about how to actually start a career as a full-time trader. Hey everyone, I hope you are enjoying the content from this video. If you enjoy content that can help you make better decisions in money and life, well, check out our other channels here as well. Talking about a career in full-time trading, right? Who do you think this kind of career is for? Because I believe not everyone is suitable for it, right?
Okay. It number one, it requires you to have a passion in the markets. And this is very difficult to explain how to get a passion in the markets, right? But a lot of people come into it looking at the opportunities. They think it's an easy thing to go in. As we first started this, talking about this business, it's not an easy business to go in, right? But a lot of people see the opportunity, whether they get exposure from maybe trading some FX contracts or during the equity bull run, they saw their friends make money, right? And then they go in. It needs to have somebody who likes to analyze, okay? They need to have an analytical mind. They need to have patience, okay? Passion is something that it hits you. If you like to play golf, you like to play golf. You like to play tennis, you like to play tennis. So it's very difficult to what do you call that? Explain passion in that sense, right? So the other thing is you like to take risks, right? Some profile of those traders who were in the program of the, what they call that, the turtle traders, right? They look for people who are willing to take risks, right? So some of those top traders that they hire these days by the hedge funds, they actually hire poker players, right? The ability to take risks, okay, know how to take risks and how to control their emotions, right? Poker players need to know how to control the emotions, okay, need to know how to calculate the risk. So these are the type of profiles that tend to love the markets as well, right? Of course, need to have a person that loves a good pun as well, right? Yeah, he loves to take risks. You have to
so
be a
generally
risk taker.
people who would like to take risks,
Yes.
while at the same time able to control their emotions,
Yes.
despite the fact under high stress.
Correct.
Right?
Yeah.
So these are the two things.
Those are the qualities that...
Right. We also talked about the misconception earlier, but
Yes.
I guess along the way, as you have coached so many people and you have prop traders who work under you currently, what are some of the common myths that you have to bust for them? Right? They probably came in and like, hey, David, I want to be a full-time trader, and then they start telling you a lot of story, right? Now, what are those common things that you have to tell them? Bro, chill. It doesn't work like that.
Yeah, one of those things that people do is getting too over enthusiastic about trading, right? And taking all sorts of trades. Where over trading is one of the biggest things that happen to beginners.
Right. They thought that you need to have many trades to make money.
Yes. They think that they have to do that. They have to chase all the signals, right? Not necessary. You have to, you have to pick your fights correctly. Which are the battles that you want to fight, right? So number one, over trading. Number two, lack of capital is one of the biggest problems as well, right? So if you don't have enough capital and you want to go into trading, especially if you want to go into full-time trading, my advice for those who want to trade full-time, okay, who are willing to give up what they want to do because they found some passion or a lot of passion in trading, is you in order to do full-time trading, you need to have at least 2 years expenses covered.
Right. Wow,
Yeah.
that's a good tip.
Yes, if you have 2 years expenses covered, then you don't have to worry about putting food on the table, okay? You don't have to worry about whether your kids are going to have a problem while you go on this venture, right? That's a good benchmark. 2 years of savings, or 2 years, and this is not your risk capital. This is for your expenses.
It's just expenses, right?
Yes, just for your expenses, right? Then you will have the proper mindset, the proper trading psychology to succeed. If you jump into it and you don't have enough capital, or you, if you took the wrong step and went borrow money to trade, okay, even worse, right? The kind of pressures that you have every time you trade is, you have this thing, say, I cannot lose, I cannot afford to lose. And that's why you have a problem, okay? Because not all your trades will be winners. Right? There will always be those losers that come, right? And the sequence of losers doesn't mean that if you are 50-50 trading, is you have a one loss and one win and one loss and one win. You can have a string of losses before the wins come, right? So if you don't have enough capital, you cannot sustain what we call the drawdowns, right? So capital is very important. Of course, the third and the last one is skills. You have to have the skills, okay? And never underestimate or never think that you were lucky in the market and that equates to skill. Right? Just because you made a few decisions, which may not be right decisions, and the results are profitable, doesn't mean you have graduated to become a good trader, right?
Yeah.
And a lot of people who went during the COVID time, they had nothing to do, they went to trading, okay? Of course, at that time, a few sectors in our stock market was booming, right? Tech was booming, gloves was booming, and then what happened to all those guys that started? They're probably in the dust now.
Yeah, like they say, right? The rising tide floats all boats.
Exactly.
Yeah.
Exactly,
So those who are left after that is the
Correct.
one that truly
Yes.
can do things, right?
Correct.
So just now we were talking about capital, right? What do you think is the ideal amount of capital for someone to start if they are really considering into trading full time? I'm not talking about dabbling. For those people who dabble, obviously you just need a small amount, right? Less than 10K, 5,000, 4,000, whatever contract that you're looking at. And if you're interested, go and check out the link in the description below. You can open for yourself a futures trading accounts with RHB, one of the most prominent investment bank in the market. Nonetheless, but for people who are really thinking about it, doing this full time, what do you recommend as that initial capital?
I think the minimum would be, at least in ringgit terms, something like 50,000, and that's risk capital. Then you can trade some reasonable sizes, right? You can make some decent money, right? On a monthly basis. Okay, again, that depends on your skill levels, right? But you can already do that starting on a part-time basis, right? Although it's part-time doesn't mean it cannot be serious.
That's right.
You can do real trading. You treat your part-time kind of a part-time business seriously, right? And slowly build that. Okay.
That's right.
Whilst you collect your capital. While you do save your capital, here you are learning the skills without. In fact, actually, it's better to start with less capital than more capital, because if you unskilled, then that large piece of sum of money that you're gonna lose it.
That's right.
Right? Yeah, most probably lose it, right? So it's better to start smaller, right? Which I always tell a lot of people who start, even though you have a stash, right? You better put only a part of it at risk until you've gained enough skills and knowledge to do it. Because trading to scale up is very easy, right? You just type another zero behind and you're 10 times up, right?
That's right.
So scaling up is not the problem. The skill is whether you have the skill and you have the ability or the method to do that. That's more important.
That's right. To put it into a conclusion, for whoever want to start your journey in futures trading full time, definitely the easiest way is to begin with a small amount, because so if you lose also not so painful, easier to replenish. You can keep going, because like one of the points that David brought up was this: there is that drawdown period that you have to survive through. If you can't survive through that, you likely can't survive full-time trading. So, but if one day you're deciding that you want to be a full-time trader, it's good to start with about 50,000 in amount. Well, I guess another option is, if you have a track record, you can always talk to David, who owns a prop trading firm. Yeah, and he'll probably fund you with it if your skill set is good enough, right?
Yes, most certainly. We're looking for out every day to the talented traders out there.
Yeah,
right?
that's your staff, right? Your recruitment is
yes. Yeah, we talk to all traders every day.
Yes. So if you would like to contact David, you can also reach out to him via the link in the description below. We'll attach his social media handles and also his contact methods there as well. Thank you very much. I hope you guys learned something today, and especially for those of you who are considering full-time trading. Thank you very much. We'll see you in the next episode.